welcome to Free Will Investing. Today we're going to be going over the Chande Momentum Oscillator. This is, as the name says, this is another momentum oscillator, so it's very similar to the relative strength index. Now, instead of using, unlike the relative strength index, which uses the average of the sums and the minuses to get their momentum, the Chande momentum uses the sum of all instead of using the average. So it uses the sum of all losses and the sum of all gains to get their momentum. And because of that, it works a little bit differently. Instead of having a range from 0 to 100, it has a range from 100 to negative 100. And anything that is above 50 is considered overbought, and anything under negative 50 is considered oversold. And another way to trade with this is to also put another indicator on top of it, which we use the moving average indicator. I have it set to the same exact settings of 9, which is the classic settings for Chande momentum. And what that does is it takes the Chande momentum and it averages it out to 9. So it shows where it is over the period of 9 spaces. And every time there's a cross, that indicates a declining momentum or increased momentum going down, which means the trend be going down. And if it crosses up, that means an increase in upwards momentum. And you use this with a mixture of overbought and oversold limits to continue going on. Such as like right here. This is a good place where they've been using it. If you would have used the 50 limit, and you could have waited until right here for the cross, and then instead of exiting out the trade down here at 50, which you wouldn't have made barely anything off of that movement, you would have waited all the way to here. And while you would have missed that second half because of the sideways market, if you're just trading with the Chande momentum and the moving average, you would have gotten way more profit by using the moving average with it as a double indication for the movement. And if you would have been trading through the sideways market, you would have got a couple gains right there. No, actually, you would have only taken a few pips loss, but not that much. And then you could have got it all back right here if you would have just increased everything. And then like right here, you can see once again using the overbought and oversold levels. I said sometimes it works, sometimes it doesn't, but right here would have been a good one, right at that pinpoint candle. That pinpoint candle, along with just hitting an overbought or oversold level with a close cross, you kind of tell us about the cross. But as soon as this cross, if you wanted to wait for confirmation, as soon as this cross came, it would have been a perfect time for a buy, and you would have made it all the way up to right here before even reaching the overbought levels. And you would have waited for an indication to go down. You would have lost a couple. Well, you would have still gained pips, but you wouldn't have got the top, which you could have gotten closer to using the other way. So sometimes it's a hit or miss using the moving average, but a lot of times if you use the moving average with it, you catch bigger trends. And it is a little bit harder to use in sideways markets such as this right here. The sideways market makes it a lot more difficult. So you'd be in a mixture of ranging. You gotta remember, whenever it crosses the 50, that also means that it's going up and it's above the overall. I mean, as soon as it goes over or below the 0 line, that means it's trending up or down depending on the direction it's going. If it's going up, it's trending up for the average. If it's going down, it's trending below the average for the 9-day moving period of the Chande. And this does look very similar to the relative strength index. If you took a relative strength index and added the 9 to it instead of the traditional 14, it would look very similar. There is slight differences because the Chande momentum does measure momentum in a different way than the relative strength index, which actually gives you more buys and sell markers than relative strength index on its own. So if you are more of a high volume trader, the Chande momentum might be a better fit for you than the relative strength index. But you can see right here, even With it going down right now, would have been a good gain so far just off of this cross if you would have used this momentum right here. I mean, you could have bounced off a whole bunch of these to make some scalp moves, but it would have been more difficult. And this move right here would have been perfect though. And right now would actually probably be a good time to get out of it if you were in it. You probably would have missed that little bit of a trade, but it is hitting that. Or you could wait till the support line, because you got to remember, even if you're using a technical indicator, you do want to use price action as one of your major influences for your trading. Well, that's about all we're going to go over today with the Chande Momentum Oscillator, or Chande Momentum Oscillator. I hope you enjoyed the video. If you did, please give it a thumbs up. Subscribe to the channel for more information about finance and investing. You all have a great day.